The United States is drowning in $36 trillion of debt, and every second that number gets bigger. To put it in perspective, if you stacked $1 bills on top of each other, they would reach past the moon and back multiple times. So how does the government deal with this? By printing more money. But here's the real problem. Inflation devalues every dollar you own. Foreign countries are dumping U.S. bonds. If confidence in the dollar collapses, the U.S. economy could spiral. But what if there was a real solution? Michael Saylor believes the U.S. could pay off its debt using Bitcoin. And today we're going to break down exactly how that would work. Before we dive into the strategy, let's clear up a major misconception. Bitcoin is not a threat to the U.S. dollar. In fact, they serve completely different roles in the financial system. The U.S. needs both because they complement each other, not compete. The U.S. dollar is a currency, a tool for transactions, trade, and commerce. It's designed for spending and facilitating economic activity. Every day, trillions of dollars move across the world in the form of salaries, trade and exports, taxes and government operations, short-term purchasing power. But here's the catch. Dollars lose value over time. Due to inflation, the purchasing power of $1 today won't be the same amount of goods in 10 or 20 years. That's where Bitcoin comes in. Bitcoin is capital, a permanent asset like gold or real estate. Bitcoin is not designed for daily spending. It's a capital asset. Think of it like gold, real estate, or stocks. Something you hold, store, and appreciate over time rather than spend every day. Here's why. Limited supply. Only 21 million Bitcoin will ever exist. Store of value. Just like gold has been used to store wealth for centuries. Harder than gold. Gold can still be mined and added to circulation, but Bitcoin has a fixed supply, making it even more scarce. Unlike real estate, Bitcoin is borderless, permissionless, and resistant to confiscation. By embracing Bitcoin, the U.S. wouldn't weaken the dollar. It would strengthen it by providing a stable currency for daily transactions, USD, a permanent appreciating asset, BTC, that enhances national reserves, a financial safety net against inflation and reckless money printing. This is why Bitcoin is not a competitor to the US dollar. It's an essential complement to it. Countries that recognize this first will have the strongest financial future. These are the steps US government should follow. The U.S. government already holds strategic reserves of critical assets. Gold in Fort Knox, the Strategic Petroleum Reserve, foreign currency reserves. But what's missing? A strategic Bitcoin reserve. By accumulating Bitcoin over time, the U.S. could hedge against inflation, own the best performing asset of the last decade, strengthen its financial position without printing money. This isn't just about saving money. It's about strategically positioning the U.S. for global economic leadership in the digital area. This is where things get game-changing. Right now, the U.S. sells treasury bonds to fund its debt, but foreign countries are losing confidence. China is dumping U.S. bonds. Japan is reducing its holdings. Saudi Arabia is exploring alternatives to the U.S. dollar. If demand for U.S. bonds disappears, the U.S. economy is in trouble. Instead of issuing bonds backed by fiat, the U.S. could collateralize new bonds with Bitcoin, offer an appreciating asset to investors, attract trillions in foreign capital. Right now, the global bond market is over $100 trillion. If just 20% of U.S. debt was converted into Bitcoin-backed bonds, it could start paying itself off instead of growing endlessly. How would Bitcoin-backed bonds work? The U.S. government would establish a reserve of Bitcoin. Treasury bonds would be issued with Bitcoin as collateral. Investors would rush to buy them because of Bitcoin's scarcity and upside potential. This isn't a theory. MicroStrategy has already issued Bitcoin-backed bonds successfully. Private companies and sovereign wealth funds are already investing in Bitcoin. If the U.S. led this transition, it would make the dollar stronger than ever while eliminating debt. For the last century, the United States has dominated global finance. The dollar is the world's reserve currency. U.S. banks are the backbone of international trade, and U.S. Treasury bonds are considered the safest investment. But times are changing. Countries are looking for alternatives to the dollar. China, Russia, and the BRICS nations are actively working on reducing their dependence on the U.S. financial system. At the same time, global investors are searching for hard assets that can protect them against inflation and economic uncertainty. If the U.S. embraces Bitcoin early, it will not only secure its financial dominance for the next century, but also become the global leader in digital banking, financial services, and capital preservation. How would this work? If the U.S. establishes a Bitcoin strategic reserve and allows Bitcoin-backed financial instruments to flourish, it would create the most attractive financial environment in the world. It will own a significant portion of the Bitcoin network. If the U.S. is the first country to formally adopt a strategic Bitcoin reserve, it could acquire 5 to 10% of the total Bitcoin supply. With a fixed supply of 21 million Bitcoin, this would make the U.S. the largest holder of the hardest asset ever created. Being the largest Bitcoin holder means the U.S. would benefit the most as its price appreciates and as global demand for Bitcoin increases. This ownership would act as a long-term capital base, securing national wealth in an asset that cannot be inflated, seized, or devalued by foreign entities. Trigger a global Bitcoin adoption wave. Once a global leader like the U.S. embraces Bitcoin as a reserve asset, other countries will have no choice but to follow. China, the European Union, Russia, and other economic powers would begin accumulating Bitcoin to avoid falling behind in the new financial paradigm. This would create a self-reinforcing cycle of global Bitcoin adoption, further increasing its value and solidifying the U.S.'s dominant position. Just as the Bretton Woods system made the U.S. dollar the world's reserve currency, an early move into Bitcoin could ensure that the U.S. remains the epicenter of global finance in the digital age. Offer Bitcoin-backed loans to global institutions. Foreign banks, corporations, and sovereign wealth funds need stable, high-value collateral for long-term investments. The U.S. could establish Bitcoin-backed lending, where financial institutions borrow against Bitcoin reserves instead of depreciating fiat assets. This would generate massive capital inflows into the U.S. banking system while ensuring financial stability through Bitcoin's appreciating nature. Banks could also issue Bitcoin-denominated bonds, offering higher yields than traditional treasuries, attracting trillions in foreign investment. Attract sovereign wealth funds to store Bitcoin in the U.S. Large institutions and foreign governments are already looking for secure ways to hold Bitcoin. If the U.S. establishes itself as the best jurisdiction for Bitcoin custody, sovereign wealth funds from Europe, the Middle East, and Asia would store Bitcoin in American financial institutions rather than offshore jurisdictions. This would increase demand for U.S. banking services, further strengthening the economy. Just as countries once stored gold in U.S. vaults, they would now store Bitcoin in the U.S., reinforcing America's financial dominance. Dominate digital banking in the 21st century. The future of banking is digital, and Bitcoin is the foundation of digital finance. If the U.S. fully integrates Bitcoin into its banking system, it will lead the next wave of financial innovation, including Bitcoin-backed stablecoins that retain the liquidity of dollars but the backing of a hard asset, decentralized finance or DeFi services supported by regulated U.S. banks, ensuring compliance while offering high-yield opportunities for investors. Smart contract-based financial instruments, where Bitcoin is the underlying collateral for everything from real estate to infrastructure financing. If the U.S. takes the lead in regulating and supporting Bitcoin-based financial products, it will become the hub for trillions of dollars in global capital flows. Throughout history, the country that adopts the financial revolution first reaps the greatest benefits. In the 20th century, the U.S. was the first major power to fully embrace fiat currencies, allowing it to control global finance through the dollar. In the 21st century, Bitcoin is the new financial revolution, and the first country to integrate it into its banking system will dominate global trade, investment, and capital markets. If the U.S. embraces Bitcoin before other major economies, it will. Solidify the dollar's dominance by backing it with the hardest asset in history. Control Bitcoin's financial infrastructure, ensuring U.S. regulatory influence over global Bitcoin adoption. Become the primary custodian of the world's Bitcoin reserves, just as it was for gold in the 20th century. Attract the largest capital inflows as sovereign wealth funds and foreign banks seek the safest place to store their Bitcoin. Position itself at the center of the global financial system for the next 100 years. By leading the transition to Bitcoin-backed finance, the U.S. will not just maintain its financial power, it will expand it for the next 100 years. The evidence is overwhelming. Bitcoin is not a threat to the U.S. dollar. It is its greatest ally. It is not just another asset, it is a strategic tool that can transform the U.S. economy, neutralize its debt, and reinforce its global financial leadership. If the U.S. takes bold action now, it can secure 5 to 10% of the Bitcoin supply, positioning itself as the most influential force in the new digital economy. Establish a strategic Bitcoin reserve, ensuring long-term national wealth and economic security. Issue Bitcoin-backed bonds, attracting trillions in foreign investment and creating a financial instrument superior to traditional treasuries. Convert unused energy into economic power through Bitcoin mining, generating wealth from previously wasted resources. Dominate global banking by becoming the safest custodian of Bitcoin, offering Bitcoin-backed loans and leading the digital finance revolution. Once the U.S. moves first, other nations will have no choice but to follow. China, the European Union, Russia, and the rest of the world will rush to accumulate Bitcoin to avoid falling behind. By that point, the U.S. will already be the dominant holder, the primary financial gateway, and the biggest beneficiary of this transition. But if the U.S. waits too long, it risks missing the greatest financial shift of the 21st century. The dollar will weaken, U.S. bonds will lose their status, and other nations will seize the opportunity to lead. The financial system is changing. The question is, will the U.S. lead the charge, or will it fall behind? Let us know what you think in the comments. Should the U.S. adopt a strategic Bitcoin reserve and secure its place as the global financial leader? Or will it continue down the path of debt and inflation? Hit that like button if you believe in Bitcoin's role in reshaping global finance. And don't forget to subscribe for more deep dives into the future of money. See you in the next one.